All right, what's up, econ students? Mr. Sansgard here. So we're going to talk about the product market and the resource market and what is called the circular flow model. And when we're talking about these, we're really talking about a market economic system. And they're places, quote unquote, where you connect the resources that we have, the land, the labor, the capital, the entrepreneurship, to businesses who then create a good and connect it to the individual. Right? So if you want a particular good, like you want to buy something, you go on the internet or you go to a store and you buy that thing, right? But somebody created that thing. Those were costs to the different company, which then becomes income for somebody, which then, of course, becomes the revenue that a company gets. All right. So what ends up happening is you get a circular flow diagram. So the markets are connecting businesses to individuals. All right, and the businesses, they produce a goods and service. So we're going to talk about General Mills here. General Mills is a Minnesota company. Famously, they make cereal. Okay, they also make a number of other goods, but we're going to focus on yummy, delicious Cinnamon Toast Crunch, which I love. Right. So General Mills, they produce that good. Okay, and it is good. It's so good. Right. Think of your favorite cereal. Maybe it's not a General Mills cereal, but Cinnamon Toast Crunch is my favorite. So they make Cinnamon Toast Crunch. They provide that good or service to, let's say, a grocery store. Let's say Festival. Festival then will connect that good and service to individuals who will shop there. All right. So I come from my mansion. That's a picture of my house right there. With my teaching salary, that's the type of houses that we have. It's small, but it's a starter home. So I get hungry. I want to get me some Cinnamon Toast Crunch. I go to a festival. I go and I buy some Cinnamon Toast Crunch. All right. In exchange, I give money. Okay. And that's spending. So money that I have, I go to my safe in my office of my mansion there, and I get some money, and I bring it to a festival. I buy me some Cinnamon Toast Crunch, and bring it home. Now, Festival, they marked up the price a little bit, so they'll keep a portion of it, but then a lot of money goes back to General Mills, who now earned a revenue. Okay, so the business then earns revenue. They supply the product while the individuals demand the product. Okay. On the other side, all right, how do you get the money that you need to? Well, you earn it in the resource market. So you have to do a job, some kind of job in order to earn money, and then that money is then used to buy other goods. So individuals, they provide the factors of production. They provide the resources. Okay, they'll provide labor, they'll provide land, and they'll provide capital so that they can get some income. All right, and then those resource markets, they then are brought to the entrepreneur in the business, who then puts everything together, and then spends money in the resource market, which then becomes income, which then becomes spending, which then becomes revenue, then costs, so on and so forth. So you can see, if you follow the money, the dollar signs, how one person's income then becomes the business's revenue. And you can kind of see that if this is going really fast, then the economy is really good. Okay. But let's say a bunch of individuals lose their jobs, okay, then they're not going to spend as much in the product market, which means businesses earn less revenue, which means they have to cut costs, which then means incomes go down. So you can see, if this thing isn't flowing very good, then we have a problem. All right. So in one end, the resource market is supplied by the individuals and it's demanded by the businesses. So let's say, what happens if the economy is slowing down? A bunch of people lose their job and they're not spending as much money. Well, the government might step in. Okay. The government also, they buy goods and services from the product market, and they buy goods and services from the resource market. Your teachers are examples of how they buy a service, teaching, from the resource market. So they have a bunch of labor that they are hiring and spending. But they also buy from the product market too. So a lot of military spending. When we're thinking about the product market, we're thinking about military equipment as well. They also provide public goods, and those cost money as well. So roads, bridges, lights, that kind of stuff is provided by the government. And then, of course, they earn an income by pulling in taxes by both the individuals and the businesses. Okay, and at the same time, if they need to pump out money, they can also do that in the forms of what are called transfer payments, things like welfare, Social Security, et cetera, stimulus packages, which we saw during the COVID crisis. They also produce subsidies, which is basically money that is given to businesses so that they will keep producing. So they do this in order to keep that economy flowing and keep that circle, the circular flow, going in the direction that they want it to. That's all for now. Thanks for watching.